the video here on whole life insurance and the benefits of whole life insurance. Now, if you've heard of infinite banking, maybe you haven't, doesn't matter. Whole life insurance is really the key piece, and it's what really matters in this kind of a strategy. Now, I tell people all the time, if you can find a better place to do this, let me know. I'm always open, but thus far as of today, this is the best place I've found to get these benefits, and that's why I want to kind of share them with you and go through what it is. Now, there's also a lot of misconceptions with whole life insurance, and maybe I can hit on some of those as well through this. So, whole life insurance, the first part that I really like about whole life insurance is the safety. Now, it has guaranteed minimum returns, meaning if they were not to pay any profits or no dividends, you would still get, you would still have some growth. Now, that being said, the profits are why we're in this. The dividends are why we are in this. And every year that you earn dividends, you can't go backwards. Once you've earned those dividends, you're there, and then each year can compound on itself, but you can't go backwards. So that's another great option for safety. Now, the companies that we use, they've been paying profits for 100+ years. And over the last 27 years, we've had a 6.52% historical in certain cases, okay? And it varies from age and person and all those kind of things. But so 100+ years of profits. They've paid profits through the Great Depression and through all the recessions that we've had. So it shows you the kind of stability and the kind of safety that these companies have. So that's safety. Yeah, so there you go with that. So let's move on to the next part that's important to me. And I'm just kind of putting these in order of my importance, I guess. They're all important. Is accessibility. A whole life insurance policy, the cash value is completely accessible. We can liquidate or we can take loans against it. And you can watch the videos on taking loans. So I talk about why taking loans is important. Why would you want to take a loan? But accessibility is huge. 401ks, IRAs, these kind of accounts, you can't access them until you're a certain age without having to pay a penalty. There's many situations, like I talk about on other videos, where people had to go into debt, even though they had money in a 401k, they had to go into credit card debt or something like that because they couldn't access the money. I'm not saying that's you. All I'm saying is the accessibility feature of whole life insurance is huge. Being able to take your money and do whatever you want with it. So that's access. Now, the tax advantages are really the other key piece to all this. First is tax advantage growth. Now, as long as we treat a life insurance policy correctly, we pay the tax before we put it into the life insurance policy, and as long as we keep that policy until the day we die, we're going to have tax-free growth. And then when you die, that money will transfer income tax-free as well. So we have a transfer of death benefit when we die with no taxes or no income tax, and we have growth with no taxes. So there you go. So we can actually avoid taxes for the rest of the time that this money is growing if we treat our money properly and we do everything right. And that's easy. You just need to talk to a professional to get that set up correctly. So tax advantages, they're huge. And you can also watch my video on on tax deferred versus paying taxes now to learn why I think tax is free and paying taxes now is much better than getting tax deferred growth and then paying taxes in the future. So taxes. Now the other part about this that for some reason people use as an argument against this is death benefit or insurance. Now, in my opinion, if you could have insurance or not, what would you take? Of course you're going to take insurance. All of these benefits are on the cash value. That does not include the death benefit. And what I mean by that is this 6.52, that's after cost of death benefit. So that means this guy had a death benefit and he had 6.52% growth, and it was tax advantage growth, and he could access it at any time he wanted, and at the same time it was buying him insurance if something did happen. So that's a nice little addition to all this, is having the death benefit. Having a place where we can put our money, but it's also going to cover us in the event of death, and that's going to be a tax advantage transfer. These are really the biggest pieces of whole life insurance, and the biggest